Hey, good morning, guys. This one's going to be just a very quick one from a subscriber's question, and this is this is not a textbook. This isn't a this happens every time. You can almost guarantee that 100% of the time, this is going to be different, right? It's more the notion and the appreciation and the understanding of the market. This is where the speed, the character, obviously down to the pairs that you trade and everything. This is what really makes a difference over time. This is the getting to know the language that we're talking, right? So, in a nutshell, the question was to do with, can you give an example of how to enter a trade? Right now, from the question, it's clear as day that people are jumping in early, right? And not just in terms of the person asking the question. I think this is just the generic, newer trader type of mindset and mentality, right? It's I'm frightened of missing a trade. I want to be in a trade. I need to be on a trade. If I'm not in a trade, I'm not making money. All of these things come together, right? And this is where a lot of retail traders tend to lose money because it's the eagerness to jump into a trade rather than the willingness to sit in your hands, wait, and see the perfect opportunity, right? So let's just assume that the price is kind of rallying up, right? So we could say that this is, say, a 4 hour, right? We then ultimately start to pull back, right? So we kind of zoom in and we come into a 1 hour. Now, in this 1 hour time frame, what we're going to see is obviously internals, A, B, C's types of moves, right? As we kind of move on down. But what we're not understanding is the correlation between the 1 hour and the 4 hour. Right? So let's just assume that the 1 hour now comes in and we've got this A on the 1 hour. What do you expect to happen, right, in terms of the move back up? So this move will come back up. On a 15-minute time frame, we're going to see an A, a B, and a C because this is the pullback of the pullback, giving us the smaller scale B, right? Now, many times people will come in and they say, well, confirmation, right? And this again, I haven't drawn this to scale. This isn't, exact. This is just kind of the concept. And this is where, too many people fail, right? So what tends to happen is you jump in here thinking life's good, right? And maybe for a little while, it is. In other instances, it literally creates this double bottom and shoots up. And this is where I can guarantee 99% of people that are still failing at this is where they're failing. The reason for this is if this is our 4 hour and we've had our 1 hour A, we've had our 1 hour B. Right? Now we're coming down for a C. However, on the 4 hour, this is only the B. Oh, I get stopped out. Well, of course you do. You've jumped in too early. So the reason that I've marked this up here, right, is literally what you have to think of is the correlation between the 2, 3, 4 time frames that you're working with, right? On the mechanical structure, mechanical trading, I've shown this in terms of the 3 time frames, right? So I want my daily, ideally, aligned with the weekly. I want that weekly aligned with, overall the bigger picture, so monthly. When I come down and invert that from the daily down, daily 4 hour, 1 hour, 15 minute, whatever I'm looking at, I want to kind of get these trades to be in favor of the general trend, right? Now, there's nothing stopping you taking, we're in an uptrend, for example, this is a pullback, and I want to take a short, from one of these positions. But the more information that you gather, right, so this year, right, the more insurance you are paying for a better trade. When you're trying to catch this trade, right, it's still the gamble, it's still the risk. You're jumping in just way too early. Right? So, using the time frames to your advantage, the general idea, and this is how I'm approaching these, is if my trend is up, I'm not even looking at this as a trade. I'm looking for the confirmation to the upside, the change of character here, followed by a pullback in terms of the break of structure readiness move, and then a potential entry there, knowing that I'm with the bigger trend, right? So there's the best kind of example that I can give in terms of the understanding, the appreciation of how you'd enter, right? There's not one specific if this, then that. It doesn't work like that, right? Everything, every move is going to be slightly different. When I'm starting to look at these on a smaller time frame, all I'm doing and all I'm saying to myself is, what's the logic behind this? Right? Now, if we look at euro in terms of where we are, right now, and I'll finish off in the video because I want this one to be very short in the grand scheme of things, right? Is if we look at what euro is currently doing right now, I'm looking at this and saying, well, one of two things. We've got non-farm coming today, right? We're in an area. If we zoom right about, let's go, say, 1 hour, right? We're in an area right now where we've obviously had a liquidity drop, right? Price obviously ground up here, right? The last buy before you sell on a bigger time frame was here, and we sold and obviously created new lower lows, right? So clearly there's interest in terms of selling there. These guys are very likely to defend that position from a selling perspective. But that doesn't necessarily mean that we're not likely to see a sweep and a move down. I've talked about the sweep on the last video and a move down on the weekly time frame. And the reason for that is that the much bigger time frame, right? And although we can say, oh, well, technically we've got, new higher highs and higher lows. The only issue for me here is if I zoom right out, this doesn't look much like an uptrend, right? Bigger picture. So my bias, as soon as I look at the chart, is down. I'm now looking at this and saying to myself, right, well, there's a last major swing high. Here's a last major swing low. We currently range bound, right? We've swept liquidity to the downside. What are we looking for to the upside? Well, we're looking for any kind of liquidity, right? Now, knowing that we've got bigger liquidity to the downside, and I've got a bias longer term to the downside, I'm looking at this and I'm saying to myself, well, what's in here that's giving me any kind of clues to take this long? Well, nothing really, right? Now, yes, we could close above here, and it's a power play. Oh, look how big this is. It's on a smaller time frame. Truth of the matter is, bigger picture here, right? I still believe in that 118 for DXY. Now, that doesn't necessarily mean that I'm right. It doesn't mean that you have to follow along. It means that my opinion, my view, my anticipation of the market move is that I'm waiting for 118. Right? Now, 118 obviously will push this back down into liquidity. This one for me has swept the highs here. We've swept the highs there, and we're currently grabbing this liquidity. The next move is all the way up here. The external high up there. Now, I'm looking at this and I'm saying to myself, well, what's the logic for this type of move? Even if we now close, obviously, in the next 12 hours, right, we're going to create this giant gap almost immediately. Chances are that could be filled. Chances are we could poke up and then come back to fill. But the truth of the matter is, right now, I'm not interested in any single situation, any position, right? Because it doesn't fit my current bias. And therefore, I'm sat on my hands. Right? Now, when you start doing this from a larger perspective, obviously you could wait several weeks for some kind of entry. When you're doing this on a smaller time frame, right, it's the same notion that you're carrying with you and carrying through from these higher time frames. So all we're looking at is the smaller time frame bias to give us a reason or give us logic as to what fits you a bigger picture. Right? Now, for me, as I said in the last video, or last two videos, is I was expecting a grind up, right? Now, obviously, this looks more like a shoot up rather than a grind up, but I'm still not looking for any kind of entry short yet. And I'm just not interested in a long full stop. For me to want to see a long, I want to see a pullback and a continuation type move. For me to take a short, I want to zoom into the smaller time frames and do exactly like I just explained in the example at the start of the video, where I see a move, I see a pullback, I see a change of character. That change of character is going to be confirmed when we have a pullback and a break of structure. Right? That for me is my security there, right, in terms of the trade and the entry that I'm looking for. Until we see something like this, just not interested, right? So there's your example, right? That's exactly how it works. This is exactly, what I'm looking for. And like I said to you, the trouble being is this will change in every situation, right? The character is going to be different. The levels of pips are going to be different. The time frame is going to be different, right? Every aspect, every facet of this is likely to be different. So the core concept is I'm just not jumping in on an A, B move and then getting stopped out on a C. I'm waiting for the C move to happen, and then that gives me the A on a bigger time frame that I've been mirroring and shadowing, right? Now that A ultimately has a B pullback, and it's that B pullback that catches majority of retail traders out. At that particular stage, you then have your perfect short, right, in this situation. And obviously you flip this to the inverse if it's long. All right. So anyway, thanks for watching, guys. See you on the next one.